Hello, everyone, and welcome to the Checkmate Real Estate Podcast, brought to you by CGE Studios, the multimedia company that encourages you to create, entice, and live nice, and WPKN 89.5 FM radio. My name is David Smith, aka Smitty D.
I'm Anthony Ramo.
And it's your boy, Biz the Manager. We in the building, baby.
Yes, sir. And today we have a very special guest, a commercial loan officer who founded Castle Commercial Capital, helping commercial real estate investors of all kinds get financing through bridge loans for fast closings. Ladies and gentlemen, I present to you Mr. Malcolm Turner.
Hey.
It's our automated applause right there. Yes, sir. How are we doing, boss?
We are doing great, man. We are doing great. This has been a great year. Last year was our best year.
Nice.
And this year is going to, we still got 2 more weeks left, but it looks like this year is going to nudge out last year's our best year. So, I couldn't be more ecstatic with how things are going.
Now, that is what we like to hear, ladies and gentlemen. Progression, constant progression. Yes, sir. So, Malcolm, just wanted to give the viewers a little insight on you. So how did you exactly start in real estate? I mean, from like the beginning. What got you into this realm in the first place?
I got into, I was doing residential mortgages back in 2006. And, that was back when you could finance a dog and their 5 puppies for a mortgage. It was like the Wild Wild West. And I was having an argument with my manager about doing the right thing, as I like to say, for one of my clients. He was a first-time home buyer. And I put him in a fixed rate FHA mortgage, nothing fancy. It was like a $90,000 mortgage. It wasn't, like $300,000. And he was like, "Oh, you could have put him in an option arm and, made $5,000 and, you made $800. Like, what's the problem?" And I was like, "Well, the guy's single. He doesn't have a fluctuating income. He's, it's his first one. That was doing the right thing. Yes, oh, you don't like to make money." Well, are we supposed to do the right thing for our clients? Don't we have an ethical responsibility? Oh, there you go, Malcolm, talking that do the right thing stuff again. And so I was talking to my pastor that next Sunday about why should doing the right thing be a badge of dishonor rather than a badge of honor, And he says, "Well, Malcolm, if you're going to put together a mortgage, company, what would it look like?" And I goes, "Well, first I do commercial, because commercial is all about the money. It's all about the numbers. It's not how fancy the yard is or, how lovely the kitchen is and that kind of stuff. It's about the math, and there were some crazy things that were happening at that moment in residential. Like literally somebody could be one day out of bankruptcy and get a $500,000 mortgage.
Oh, wow.
And so, it just wasn't, obviously we know it was going towards a bad place.
It's not as predictable as commercial.
Commercial was more sane. And so I said, well, let's do that. And, no, actually he asked me, how would you set it up? And I said, well, you get an office, you get some furniture, you build some relationships with some lenders, you do ba-boom, ba-boom, ba-bing, you set up an office, easy peasy. He said, great, let's do it. I was like, whoa, I thought we were talking hypothetical. If you were, I thought you were just asking me just my opinion. I didn't know you were serious. And he was like, "Oh yeah, we should do it." And I was like, "Okay, well, I love you like a brother, but you don't know nothing about mortgages, and it's going to be we're going to be unevenly yoked." Now, at the time, he's my pastor. I'm unbeknownst to me, I'm his future deacon, right? So our relationship with deepen, but I was just like, he's like, "Yeah, but you're a great guy with money. I trust you." And he goes, "You're right. I would have to, let you train me and put everything together." So, and I said, it wouldn't feel good if I do all the work and then we split the money 50-50. Right.
Mm-hmm. Yeah,
so,
exactly.
And I don't want to mess up our relationship, And he's like, "You're right. I tell you what, I'll fund it You set it up, I'll listen and be open, and we'll handle it that way. And I was like, oh, okay. And then within 2 months, we set up Castle Commercial Capital.
Nice.
Wow.
And I'm not gonna lie, just listening to your story, there were a little bit of similarities into how me and Dave kind of got into business. Him and another cousin of ours had already started an LLC, and I had came along a little while after, and I was just like, yo, let's get an office, like let's get a space for us, let's take out a loan, let's do what we got to do. And everybody was like, wait, whoa, can we do that? And I was just like, you know what, let me make it make sense for us, kind of thing. And we just went out and took the leap of faith, kind of, and we all went at it together, made sure that, you know, we each individually brought something to the table so that nobody felt taken advantage of. And just like hearing your story and seeing like the similarities between our stories, it's like, okay, we are doing something right out here, if that makes sense to you.
No, it's key. It's key. And I see relationships, business relationships that fail because they're not, you know, again, to use that biblical phrase, they're not evenly yoked. And if you're coming to the table, you know, you have to make sure you're adding value so no one feels taken advantage of and no one feels like they're carrying somebody, you know. So I tell partners all the time, I'm like, okay, if you don't have any money, then you got to bring some skill sets, you know, or a hell of a work ethic.
Exactly.
You know, somebody's got to make the calls. Somebody's got to dial for dollars. You know, somebody's got to find the deals. Somebody's got to negotiate with contractors and chase people down and, you know, blah, blah, blah. And so there's always work to be done as long as it's spread. And if I can't bring money, then from my perspective, I need to bring a proportionate level of work. Right. You know, correct. Or the opposite. If I'm bringing on a partner and, you know, I'm funding most everything and he's not, then he's got to be bringing some relationships or skill set or again, just flat out work ethic that, you know, that I'm not, and I'm okay with that, you know, because the one thing about real estate, there's a lot of people with money who they already worked hard. They don't want to work hard some more. They still want to make money though.
Yeah. They want to just make their money work for them.
Exactly.
Yeah, and if they team up with some folks that, you know, are willing to put in that hard work to make the deal work, and they just put their money to work, you know, and everyone's ethical and honest and, you know, reasonable, level-headed people, okay, we can work that out.
The common denominator that I'm seeing based off of this conversation so far is funding. And to preface that, I wanted to touch on your book, Financing the Unbankable Deal, and, you know, how all of everything in life generally revolves around money, especially in this large commercial space, you know, funding the purchase of that property. So how did your experience as a loan officer and, you know, starting your business inspire you to write the book, Financing the Unbankable Deal?
Yeah, I put that on camera for you guys.
There we go. Product placement.
We love some plugs. Plug it in shamelessly.
Yes.
Right.
We love it.
So I got the point of this book was, you know, we looked at where do we add the most value. And so and I'll be frank, I wrote the book for one reason, you know, only. And that was, well, I should take that back. Two reasons. One, for people who weren't familiar with the commercial loan process, I needed to give them a roadmap to say, here's what you can expect to happen, right? And here's some mistakes that I don't want you to make that's going to make it harder, you know, for you and for me, right? And then the other thing I wanted to do was say, okay, in the marketplace, how are we different? How's my firm different? You know, and there's no greater differentiator than becoming an author, you know, because everybody says, yeah, I should write a book. or they'll be like, "Oh yeah, David, you should write a book," and you've been hearing that for like 20 years, and you never done it. So when you go out and you put your brain on paper and you order out your processes and you order out your mindset and all the case studies and strategies and the experience you put out in the years, and you pour it into a cohesive, flowing narrative, that's real work.
Yes, sir.
Very much so.
And it's hard. It's honestly, it's the most difficult thing I've done professionally.
Why would you
Is
say
write the
that's
book.
the case? Why would you say it's the most difficult thing?
Well, Henry Ford is famous for this one quote where he said, "The hardest thing a man could ever do is to sit down and think," which is why so few men want to engage in the exercise.
Wow. I've never
They
heard
rather
that
have
before.
someone else tell them what to do,
Yep.
how to do it, how you're going to get. I mean, that's why you have a nation of employees versus
Yes, sir.
employers,
Correct.
right? Because if you're an entrepreneur, you come into your office and then you're like, okay, what am I going to do today?
Yeah.
You have to create
No
the
one's
tasks
telling
for
you.
yourself.
Yeah.
Yeah, you got to lay it out. You got to, game plan how we're going to work this business. What processes are we going to put in place to make the deals flow? How are we going to get paid? When are we going to get paid? I mean it down to the basic stuff of what software are we going to use? What phone systems are we going to use? What's the best, like in our situation example, we created our own mobile lending app, right?
Wow.
So then it was like, okay, well, what platform are we going to use for the app? We know we're going to put it to market on the App Store and Google Play, but what actually software platform are we going to use? And what's that whole thought process? Well, that's all up to us and up to me to figure that out, and then bring, a good team together to craft that. Just like when I wrote the book, I didn't write the book by myself. I mean, I got a publisher and we had a media consultant, and I submitted my first draft, and he would come back and say, "Oh man, this is great," or you know what, you got to add some more meat to this bone, and we revised it and revised it and revised it. So, one thing about, my book is it's not that, it's about 187 pages, something like that. And it's a quick read because we cut out the fat and then we edit it and we cut out some more fat and we edit it some more so that you just get what you need. There's not a lot of fluff in this book,
I like
and that was by design. But I didn't come up with that on my own, because if I would have wrote the book by myself, it would have been a textbook and nobody would ever finish it. Like what's cap rate? What's NOI?
Yeah.
What's blah? And then you'd be like,
Yeah.
Yep. You're only
Nobody's
as
reading
good
that
as the
book.
people you have around you, and it's always great to have people that can show you and guide you in other ways that you're not so familiar with.
Exactly, because heavy is the head that wears the crown. So if you delegate properly and you manage these tasks and these things together, like you said, with a purpose on the same page, cohesively, you're bound to win. And you're
what the
walking
secret
testament to
is
it.
to that, David, is you gotta, and I know you guys probably heard this before, but so few people do it. You gotta have people on the team who are smarter than you.
Absolutely.
Yep.
If you're the smartest person in the room, you're in the wrong room,
Yeah, I'm in the right
right?
room.
And so if you have, and everyone theoretically should be brilliant, but folks should have complementary skill sets, and you should have the kind of intellect in the room where you feed off each other.
Exactly.
You're the match and I'm gasoline. And maybe Anthony is the blower, right? Because you can have a match and you can have fuel, but sometimes you need to put some air to it, right? To really get
Keep
that thing
flame
cooking.
going.
Yeah.
Yeah, get that flame going quickly. And so everyone has a role to play, And and I think some of the folks that I see didn't quite do as well as they should have, is because they were like, well, this guy might know more than me, and he's going to take over.
Mm.
And so,
Almost having like an envious mindset to it.
Power struggle.
yeah, and not being comfortable in one's own skin to say, oh yeah, this guy is better than me. The guy that worked with me on my app, oh my God, that guy knew more about technology and Excel spreadsheets and programming and stuff like that, then I have time to learn, and I don't want to learn that stuff. So I hired somebody that's really, really good about it. My publishing consultant didn't know squat about commercial finance, right? But what he did know was how to craft a narrative and how your readers are going to respond to the information. So I might have really good information, but if I bore the hell out of people,
like what does it really matter?
they're not going to read. They're going to read the book. So he would go through and say, "Okay, I get a quick reading example, right? If you write 20-word paragraphs, your book won't get read." So when I did my first couple of chapters, he butchered it, and he was like, "Okay, you got to write so that you get 3-4 sentence paragraphs tops."
Interesting.
That makes sense.
Because the most important thing about the information is it has to be consumable, right? So it's like, you could give them a big old steak, or you could cut it up for them and season it for them. And so they just take the fork and they're just eating one good juicy, like steak bite.
Exactly. Yeah.
Right.
Metaphors.
That's like kids love chicken nuggets, right? They can eat chicken nuggets all day, but if you put like a whole rotisserie chicken in front of them, they're like, "Oh, this is too much."
Yeah.
Yep.
So you take your content and you make it chicken nuggets. Not in the sense of the quality, but
absolutely.
It's bite size. But I could do two-handed and go through a ton.
Just bang down. You don't have
easily consumable.
Yep.
Yeah, but while we're on the topic of your book, when it comes to like challenges in the commercial real estate deals, can you share some specific success stories? Some specific success stories that basically are outlined within your book, and strategies you used within that.
Sure. We created what I call the BLISS method, right? And BLISS stands for Bridge Loan Investor Success Strategy. Okay. So the most profitable deals in the marketplace are not bankable. They're just not.
No,
so
not at all.
But that's what the opportunity is, right? So example, if I take over a 100-unit multifamily complex that is 100% occupied, top of the market rents, right? It's in beautiful condition. I don't have to do anything to it, right? Am I going to pay a high price or a low price for that?
Oh, you're
going to pay for that one.
Yeah.
I'm going to be paying through the nose.
It's gonna go.
Right. So there's no deal to be made, right? Now, if I go into a property and it's like 20% occupancy and it needs a ton of work, right? And the rents are like, literally 50% of the market. Okay, I'm going to be paying a really low price for that property.
Yep. But it's not
now
going
there's
to
more risk
for the bank lending, correct?
Correct, but at 50% occupancy, it's not stabilized.
Correct.
Right. So in I don't know how familiar you guys are with lending, so forgive me if I'm being redundant to what you already know, but the key is stabilization. If a property is stabilized, it's bankable. Okay.
And when you say bankable, you mean like a bank is willing to give a loan towards that property.
Correct.
Gotcha.
Correct. Or some other high level financing. Like example, the multifamily space, there's Fannie Mae and Freddie Mac.
Gotcha.
Okay. In residential, Fannie Mae and Freddie Mac buy mortgages from the banks.
Okay.
Okay. So when you get a mortgage at Chase or, Bank of America or even a credit union, that paper will end up at Fannie Mae and Freddie Mac.
Understood.
So they loan you 100,000, Freddie Mac buys it, the bank gets their 100,000 back, and then they lend it out again.
It's one big loop of
fractional reserve and all of that. Yeah, banking is crazy.
Yeah, and it's they're making money on the float, they're making money on the rate. Sometimes they're making money on the servicing. They're splitting that. But they're not. But that actually 100,000, that principal is getting recycled over and over and over again. Right now, anyone who's put loans in their own name and they tried to build a empire with that, they run into the 10 property rule, which is Fannie Mae says, listen, we're not going to buy any more paper when you get past 10 properties.
Yep.
So then you want to get that 10th or 11th property, and the bank says, oh, we can't do it. No, they could do it. The problem is they're going to be stuck with the note. And they're not being stuck with the note for 30 years. That's not how the game is played, right?
Yep.
So, you're like, okay, I'm going to have to sell one or use cash to pay off maybe a smaller mortgage in one of older property in my portfolio so that I can free up that slot, right? Or you go commercial, right? Fannie Mae in the multifamily space, they are a backer of the paper. So you have lenders that they're the opposite, where in the first example, they're lending you their money and they're being reimbursed by Fannie Mae and Freddie Mac. In multifamily, in the commercial side, Freddie and Fannie are like the lenders, and the banks that deal in that space are more like the processors.
I see. They're like middlemans in this situation, kind of.
Yeah. But they're never actually loaning their money. They approve your loan, and then they take it to Freddie or Fannie. And like I'm doing a Freddie Mac loan right now in Orlando. Okay, we're about 8 days from closing, and on that deal, it's Freddie Mac's money. The bank has already went through the gyrations. They know what to do to get the deal done, and now now we got to satisfy Freddie, right? It's a relatively short process, but it's Freddie's money. But the rates are fantastic. But that's not a deal that's got issues.
Exactly.
That's a property that's 100% full. It's in Orlando. It's in a great market, right? They're getting really good rents. The property doesn't need any work, So there's that's definitely a bankable deal. Now, where the opportunity comes in is when they first bought it, because when they first bought it, that property was the rents were, I want to say, 35% discount to the market.
Wow, that's very significant.
Occupancy was only maybe like 70, 65%.
Wow, another underperforming factor.
Right. And it was their first deal, which is another challenge.
Yep.
Right. So bank is like, oh, you're brand new? Oh, yeah, we're not doing that. Oh, the occupancy is less than 90%? Yeah, we're not touching that. It needs some work. The rents are low. Yeah, we're not doing that deal. So our bridge loan strategy comes in where they'll get a commercial bridge loan that is way more flexible, moves a lot faster. We can accommodate a new investor easier than a bank will, and they get the deal done. Now they're buying the deal under value, right? So they may get that deal at like $600,000. Change the tenants and upscale the rents, right?
They're forcing
get
the
that rent roll to 100%. Now we do an appraisal. Hey, $1.3 million.
Just doubled your money right there. 600K in equity from about 150K in value add, upgrading some units, bumping up the rent to fair market value. Couldn't be a better situation.
Now, Malcolm, sorry, was there any specifics, like motivating factors onto looking towards those like alternative financing options and like just kind of like getting the traditional investors on board with various financing options? Is there any kind of like different avenues you had to go with that?
No, I mean the finance market is very robust. It's very robust, and what I observed was, and I write about this in the very first chapter of my book. You know, when someone calls me, I'm never the first person they call. You know, unless it's like a referral.
Yep.
Okay, I'm never the first person they call.
Yeah.
You know, they're calling Chase, they're calling Bank of America, you know, they're calling Greystone, you know, they're calling some other, and then when they say no, hell no, you know, but the person says, well, man, I'm getting this deal for 600,000. There's got to be a way.
You're the way.
And then they'll start asking around, and somebody says, hey, you know what? I heard about this guy. You know, he got this impossible deal done and nobody thought it'd get done. Maybe you want to give him a call, you know, or they go on YouTube, and we have a YouTube channel, and they'll see something on like bridge loans or difficult deals, and they'll, you know, find us that way. They'll watch a video and they'll be like, oh yeah, this is exactly what I need.
So you guys are the alternative financing option, basically.
Yeah, we are. We are. And you know, I'm not saying that in any braggadocious way, but I'll put it this way. This book is the only book on Amazon that exclusively covers bridge lending, commercial bridge lending.
You heard it first, ladies and gentlemen.
And that's
how many books are on Amazon? How many? You know, how many books on real estate and real estate investing?
A lot.
A ton.
Yeah.
A ton. But that was one of the reasons I had to write the book, because first thing you do when you get in the publishing game is you got to look at your competition, and you got to evaluate what's out there. Are there gaps in the marketplace? Right. And what I figured out when I was doing this enterprise was where does Castle Commercial Capital add the most value to the marketplace? It wasn't with SBA loans, even though we do them. It wasn't with Freddie Mac and Fannie Mae loans, even though we do them. It was with bridge loans, because those people that would come to us after being turned down for 6 months, 9 months, a year, you know, they get close with a couple lenders. They waste, you know, thousands of dollars in due diligence on deals that lender would never do.
Yep.
And they're just like, man, I'm about to give up. And then we get it done. That's, you know, and again, going to the deal where they're buying it for 600, and then when they get finished with it, that value is 1.6, 1.5, that kind of thing.
Now
it's like, okay, these are my, and then we refi with Freddie and Fannie.
So my question
At
for
that
you,
point.
Malcolm, is obviously you've been able to stand yourself apart from all the traditional lending options. How do you stand out from all the other bridge lenders out there? You know, and loan officers that can provide bridge lending.
Well, I'll tell you the obvious. We're the only bridge lender. There's a ton. There's more bridge lenders out there. I got fingers and toes, to be honest. Okay, but we're the only folks in the game that wrote the book on the deal.
There you go.
Okay, so you know, we're the, you know, when people deal with us, because we're a lender and a broker. So we have funds that fund all our internal deals where Castle Commercial Capital is on your mortgage, right? And then, but we don't lend on everything. No lender does, right? So when someone gives us something that's outside of our credit box, as we like to call it, then I take my lender hat off, I put my broker hat on, right? And then, you know, I call, you know, various capital sources that I have a relationship with to get the deal done, you know. But when I talk to people, they say, well, I'm working with a broker or a lender or whatever. And I say, well, how many have their own mobile lending app? How many again wrote the book on the topic? How many have the integration that we do with education, because we have a YouTube channel that explains all this stuff. So someone, can educate themselves and get comfortable before they actually write out an application. And then
Absolutely.
I sponsor 3 meetup groups locally in my area. I guest on other meetup for other meetup hosts, at their meetings. Obviously, I'm on podcasts and that kind of stuff. So having that service, education, and then the tools, those things,
compounds.
make us unique. Because like with our app, nobody likes chasing their broker down. Nobody's trying to chase their banker down.
Nope.
So with me, they can, go in the app store, download our Castle Commercial Capital app, and they hit loan qualifier, pick example, commercial long-term or multifamily bridge or whatever the situation is, and then put in some basic numbers. And within no more than say 10 or 12 inputs that they'll get from the realtor while they're sitting there waiting on them to show up in the driveway, they'll know if the deal qualifies for financing.
Wow. Okay. So your turnaround time is just generally a lot quicker because you're more easily accessible. It seems like a whole total full service, full catered process to the consumer, to the client. And
Absolutely. And we answer the phone. So
That's it right there.
I mean, I don't know how many guys you've called.
yeah, exactly. I have called quite a few.
But it's a terrible thing to say, but even though it's 2023 and we got all these tools, just answering the phone puts me above like 90% of the market because people are like, they don't want to answer their phone. Now I can't talk to everybody when everybody calls me immediately, but I return phone calls, and I'll be on with someone and I'll say, hey, dude, I can't talk. I'll call you right back, and then I call them back.
Yep.
Staying
They leave me a message if I'm on the line and if somebody calls me right now, obviously I'm not taking that call. They're going to go to voicemail, but they're going to get a call back.
Exactly. Most people don't have the courtesy to return that call.
No, especially if the news isn't awesome. Right? It's easy to call people back when you're like, hey, you're approved. Right?
Everybody wants to hear the good news.
Yep.
Right. But, how do you know your deal is going south? When your loan officer or broker ghosts you.
Oof.
So with that being said, within your book, you mentioned the 6 C's of underwriting that banks use to like reject loan applications. Can you navigate that a little bit and like discuss like just don't give them too much, you know what I'm saying? Because we still want them to grab the book, but like just to like help navigate what the 6 C's are that you are talking about.
Yeah, well, it starts out with the basic stuff, right? So you're going to have credit, which obviously needs to be on point. And I'll say this, something I didn't mention. One of the new tools we started, we have this Castle Smart Credit program. So we've had a lot of people who they're just under a credit tier, right? So like generally in commercial real estate, you need to have a 700 credit score. Okay. There's some programs, okay, I can go down to a 680. You can still get your deal done. Okay. Now you're going to pay a little bit higher rate than if you're at 700, but you can still get it done. Right. You get down to like 650, that deal gets hard.
Yeah.
It better be, everything else about the deal better be exceptional. And because my credit score is going to be the weak link,
Absolutely.
right? So with our smart credit program, we have it's a software. You have like Credit Karma and Credit Check Total, these kind of things. It's similar to that in the sense that they can pull off their credit report. It's a soft pull because if I pull it, it's a hard. And now the worst thing I can do is take a guy who's on the edge, cause him an inquiry, and drop them.
Yeah.
And then I got to tell them no, and I screwed them, right? So with our program, he can actually pull up his all three bureaus, right?
That's actually
see what's on them. There, we have a section where he can dispute things that are negative and incorrect, and get them taken off. Similar to like what you would see with credit repair, but it's done inside the software directly to the creditors, right? And then we have a really nice what we call score boost program, where we could show them. Let's say they've got $10,000 of credit card debt, and they're going to pay down $5,000. Our program will tell them not just what their score will be if they pay down that $5,000 in credit card debt, but who to pay, when to pay them, and how much to pay them.
So that it has the most significant impact on their profile?
Absolutely. Because you're trying to get a loan done.
Correct.
Yep.
Right? So you don't have 3 months to get your credit score up. Right?
No.
So what can I do to get another 40 points right now? And
That's
and
a
our
powerful
software
tool.
answers that question. And so they can see, okay, in the average, I show what the average member, they get a 60-point increase in the first 21 days.
Wow.
That is a powerful tool.
That's a powerful tool. And
Get that tool
it
for
helps
everybody.
us selfishly, because people who are below the rim, right, we get them above the rim. Okay, now they can dunk like everybody else,
Yep.
right? And those folks who were already dunking, well, now they could do an alley-oop, right? Because
Okay.
by going from, say, 7 to 740, they're now going to qualify at a better rate,
Correct.
which means they can borrow more money, right?
So what's the lowest rate you've seen thus far that someone was able to get through this credit profile increase, through their credit score increase?
Well, those are two different things.
Let's put it like this: when you had corrected someone's credit profile, what is the best score that someone was able to get by bringing them up to for the example, the 700 to the 740?
The biggest increase was 175 points.
Nice.
Wow.
And
I need that.
yeah.
Okay.
So they were, they were really low.
Yeah. Can imagine.
Because you got to be really low to have that kind of increase.
Yeah.
And by the way, that was no games. We didn't lie and we didn't put like fake accounts on their credit. It was none of that kind of nonsense. It was just straight up diligence and putting the right stuff on. Because listen, every loan officer worth their salt, okay, should know how to help a client get an extra 20, 40 points. It's like, look, you're doing this wrong. Do this and this and this, and don't do this and this and this, okay? Because that'll kill your credit too. But let me jump forward too with the other 6 C's we talked about.
Definitely.
Cash flow. What is the cash flow on a deal? That's key. What's our NOI looking like? What's the quality of our collateral? Right? Is it good? Is it bad? Is there something I can do to it to improve it? What's my character? Every commercial loan, you have to pass a background check. If someone has $100,000 tax lien, dead deal. If they've got $50,000 in back child support, hell, $10,000 in back child support, that's a dead deal. Because from a lending perspective, it's like, man, the IRS can put you in jail. I can't.
Yeah.
Right? So, and from a kid perspective, like, man, you won't take care of your kids? I know you won't take care of me.
Yeah, exactly.
So, it's just a character thing. And that character thing also flows into credit, right? Because at the best measure, and people hate credit, they hate FICO, the banks are all mean guys, but I had someone call me about a deal. They had like a 550 credit score and they wanted a no money down commercial loan.
It's not happening.
And I'm like, why am I talking to this person? Right? I'm because they were like totally unrealistic.
Yep.
You know, and so I was telling them, hey, you need to do A, B, and C, and they were like, Malcolm, I just be just get it. I was like, hey, I'm trying to help you.